Ulta Beauty is a stock that's fallen a lot recently, and it seems like a lot of people are talking about it. So I thought it made sense to do a video telling you why I think the stock is down, what I think it's worth, and where I'm interested in buying. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice, and everything here is time sensitive. Let's get into it. So Ulta is going to be reporting May 30th. They're going to have their next earnings report. I do think that there is some more downside for the stock, but I think that it is at levels now where it is a very attractive investment, which is why I think a lot of people, especially in value investing circles, are talking about it. This is a stock that just back in March was trading at over $570 a share. It's fallen significantly. It closed on Friday at $381.78 a share. Value investors are looking at this. They're looking at the price to earnings. They're looking at price to free cash flow. And they're saying this thing is looking like a pretty good deal. There are some headwinds for the company. Ulta shares fall as CEO warns beauty demand is slowing. You also see, I like this third point down here. Many retailers, including Macy's and Kohl's, have been trying to drive sales growth by expanding their focus on beauty. What this really comes down to, I think, is that Ulta has seen such great growth over the past 10 years or so, maybe more than that even, that other retailers are starting to try to get in on that market some. Now, I think Ulta is going to continue to be a leader in this space, so I'm not saying like it's going to crush this company or anything like that. I don't think that's going to happen, but I do think that it is something to factor in. Everybody seems to be really bullish on Ulta at these levels, and I understand why. It looks like a great value play right now, and honestly, I think people who buy it at current levels are going to do just fine in the long run. But I do think that we have to be a little bit weary of what could happen that could put pressure on the business as well. So we can't just focus on the things that it has going for it. We also have to focus on the things that could present some headwinds for them. So slowing growth, obviously. When you grow as much as Ulta has, you look at some of this 10-year median returns, ROIC, 28.3%. You look at the 10-year CAGR for revenue of 15.4%, 10-year CAGR for EPS at 23.5%. And you look at the 10-year CAGR for free cash flow, 26.2%. Ulta grew so massively over that 10-year period. I just think the stock ran until it had a catalyst to come down. And once the market saw that slowing growth, once the market saw some of those headwinds a little bit, even though this company, I think, is going to continue to grow and continue to do well, it caused a correction in the stock. And that, I think, is similar to what we're going to see in some other stocks, not to get into them here, but things like NVIDIA. I think it's going to continue to run until it has a catalyst to come back down. And the more it runs beyond its intrinsic value between now and then, the more it's going to have to come back down when it corrects. And I think Ulta is kind of a microcosm of that happening recently. So if we look at my valuation for this stock, I've got revenue of $11,723,050,000. That was the estimate from Ticker from May 24th, 2024. And in the last earnings call, according to that CNBC article I showed the screenshot of, they guided between $11.7 billion and $11.8 billion in sales. So that seems to line up with that analyst estimate. So I thought that that worked well. And then for the following year, I have a revenue of $12,447,330,000. Again, from Ticker, May 24th, 2024. So seeing some good growth, obviously less growth than we've seen in terms of revenue, at least over the past few years. But I think that, again, is natural when Ulta has grown so much. They're going to continue to grow, but maybe they can't grow at the rate that they have, in some recent years. And that's okay, as long as you're paying an appropriate amount for the stock. Going forward, 2026 fiscal year going forward, I took the average of these 2 years, the analyst estimates for revenue there. I took the revenue growth rates for the 2024 fiscal year expected and the 2025 fiscal year expected. I average those revenue growth rates and you get 5.39%. I think that's a reasonable revenue growth rate at this point for Ulta at the point of its growth as a company that it is at right now. You know, that's solid revenue growth for a retailer that is more mature now as a company. And I just carried that forward through to the 2023 fiscal year. 2033 fiscal year. So I did 5.39% revenue growth going forward through, this is a 10-year valuation, from 2026 fiscal year to 2033 fiscal year. Now for net income, I took the shares outstanding from the 2023 fiscal year 10K, and I multiplied by the GAAP EPS estimate from ticker as of May 24th, 2024. And you've got a net income margin there of 10.89%. The following year, I basically did the same thing, but with the estimate for the 2025 fiscal year, you get a net income margin of 11.33%. I then took the average going back to the 2021 fiscal year, and I averaged the net income margins from the 2021 fiscal year through the 2025 expected fiscal year. And I took that average of 11.47 and carried that forward throughout the rest of the valuation. I think that makes sense. As they continue to do online sales, as they build the shops they're building in another retailer, that should, you know, help them in their margins, because it doesn't have to be their own storefront where they're building those shops. So I think that those things will help their net income margins. Maybe they can even surpass that, but I think that that's a good estimate, especially if they do get some pressure on the business. So they've got some positives and negatives here, right? They get some pressure from competition, more from Sephora and Kohl's and more from Macy's in terms of this beauty retail industry. They get some more pressure in that regard. Maybe they make up for that some with more online sales, more shops and other retailers, and that helps them to maintain that solid net income margin. So I think that's a pretty good estimate for them going forward. Free cash flow to net income. I took the, again, analyst estimate from ticker for free cash flow for 2024 fiscal year and the estimate from ticker for the 2025 expected fiscal year. So I took those estimates for both, and they seemed pretty in line. When you look, that would be 87.77% free cash flow to net income for the 2024 fiscal year, 87.19% for the 2025 fiscal year. You look at what they did the last few years, that seems pretty in line, okay? And then I took the average 2021 fiscal year forward to 2025 expected fiscal year for free cash flow to net income and carried that through the rest of the valuation. I'm not just going with an average here for the sake of going with an average. I think that, you know, this about 88% free cash flow to net income number makes a lot of sense, because they're going to have physical storefronts that they need to maintain. They're going to have capital expenditures from that. If they're opening new stores, they're going to have capital expenditures from that. So I think, you know, not going toward 100% free cash flow to net income makes a lot of sense for a retailer like this with storefronts that is probably going to be expanding and opening more stores. I think this number makes a lot of sense to not get too aggressive with the free cash flow to net income. Now, I use a perpetual growth rate of 2.5%. You can see the calculation for the weighted average cost of capital, beta of 1.36, US 10-year bond rate. You can see there, the market cap there. Now, I believe all of Ulta's debt here is leases. I don't think they actually have any net debt. You can correct me in the comments if I'm wrong on that, but I looked at the balance sheet. I looked at the company. I think I've even seen other people say it. They don't really have any debt. They've got their leases, but that's another thing that I really like about the stock is they're going to be able to use their free cash flow to buy back shares to grow the business, because they're not going to be tied to that debt. So that's another thing to consider here. I get a fair value of equity of $350.24 per share. I am fine, honestly, getting into this stock at about $350. I do not need a margin of safety really on that number for me personally. That is where I'm planning to buy, is $350. I do think that it will go to that level. I think that when you think about these things and the fact that when stocks have big drawdowns like this, we look at what Meta did back, in 2021, 2022, how long it took to find a bottom, PayPal, and what's happened with that. I think a lot of people are bullish on the future of Ulta, and I think, that makes a lot of sense, but I do believe that it hasn't found its bottom yet. It closed Friday again at 381.78. I think that 350 target makes a lot of sense. That's I think it's less than 9% from where it is now. So I'm going to probably get into the stock at 350, and then it'll probably be a half position or so. And then I can average from there if it does continue to go down from there. If it goes down like 20% from there, I'll probably average down some. And that's why, I won't open that full position right away. We look at the shares outstanding from the 2023 fiscal year 10K. That's what I used for that number. And then you get PE of 20 after the 2028 fiscal year with the same number of shares outstanding there in B18, be $692.27 a share. So you think about if I want to double my money in 5 years, that $350 number makes a lot of sense, because the stock's probably, in the low 20s for PE in 5 years, in my opinion. And that would allow me to double my money with some buybacks. If it trades in the high teens, I probably could still double my money in 5 years. And so that's what I'd be looking to do with the stock. So $350 for Ulta is where I'm looking to buy. Let me know what you think about this stock, this valuation, this company. Drop a comment. Follow me on X at Stock Sale Flyer. Like the video, subscribe, click the bell to get notifications about future videos. Thanks again for joining me today. And as always, take care.